And now back with us, as I promised, billionaire investor Wilbur Ross, chairman, CEO of W.L. Ross and Company, one of the world's leading private equity firms, and one of the great Americans. Wilbur, great to have you with us this evening.
Thank you.
Let's turn to these markets. You said earlier in the broadcast that you believe it's not over. How severe is this likely to be, and over what period of time, as best you can judge?
Well, it's hard to get both parameters right. If I can get one of the two right.
I thought I'd test you earlier.
But I think we're in a period where people have to reevaluate the fundamentals. The most recent advance indicators in the U.S. were a little bit on the soft side again. China certainly has got its problems, and I think in China they're trying to do too many things at once, some of which are contradictory. Like they're trying to convert to a consumer-based economy, and at the same time, the much-needed crackdown on corruption. The problem is everybody's scared to death to spend any money in China. They're afraid of stories. Waitresses in restaurants are taking email photographs of people wearing expensive jewelry, emailing it to the police. They come and arrest the people on the spot. Doesn't take much of that to chill consumer spending.
Consumer spending there chilled. There seems to be also a different attitude, at least on the part of many of the business people that we talk with, about China. The concerns are obviously mounting, as you're describing other concerns. CEOs who've tremendous investments in China are backing away, it seems to me. They're not as quick to applaud Xi's regime, not as quick to get excited about prospects for China.
Well, China is no longer the world's cheapest place to manufacture, and they could be heading for some difficulties if the Trans-Pacific Partnership gets approved. If it does, they will remain outside the roughly 15% trade barrier to the U.S., whereas Vietnam, Thailand, Indonesia, Malaysia will all be inside. Same thing vis-a-vis Japan.
Devaluation by the Chinese over now days and now entering weeks. Are we now in a currency war globally?
I think China needed to devalue, and the reason I think they needed to is having been pegged to the dollar, their currency has been too strong relative to the other emerging markets. For example, against the Mexican peso, the yuan is up 50% in the last 10 years.
Right. And of course, against the dollar, we continue to be facing a mercantilist trading partner in Beijing, and that devaluation not helping us in any way in this country. Let me turn too quickly, as we're short on time. Your outlook for the U.S. markets, for the U.S. economy, if I can, over the course through the remainder of this year into next.
Well, I first of all believe that the Fed will raise the rates a quarter. And to me, whether they do it in September or December is hair-splitting. And I think they'll probably raise it by another 100 basis points over the next 12 to 15 months. Personally, I don't think that's the end of the earth. Rates will still be pretty low. But it's become such a symbol and such a feared event that I think it will have an impact.
And nonetheless, you think that Chairman Yellen will go ahead with it?
I think she will, because I think she doesn't want to have no bullets if and when the next crisis comes around.
All right. Wilbur Ross, it's always good to have you here. Thanks so much.
Thank you, Lou.